And really, catch up pain relief is basically understanding the supply and demand equation, why there's likely to be more supply or demand orders at a certain area, and identifying all the market participants from a technical analysis perspective as to who's buying and who's potentially selling at a level. Yeah, so this was the area that we were looking to potentially, our traders were looking to get short on. A really nice trade. And then we had another trader by the name of Maxwell, again on the 15th, who had published this trade again a bit later on, but he had gone into a bit more detail. This is a fantastic, I think, a bit more detail, but this is a fantastic chart. This is what I would call an A1 setup, and well done to you, Maxwell, as well, for being in the group, you know, and really posting this for the guys. So this was the original chart that he had posted at the time. And really nice analysis. So I'm going to go through this analysis, and so what he's pretty much done is it's understood, and what I guess you guys have to really understand as well watching this is what we're trying to do is look for where, first of all, obvious trades fail. Traders. So there are really only three main traders. So there are breakout traders. Yeah, you've got breakout traders, you've got retracement traders, and you've got level traders. Yeah, and all three of those traders will trade levels. So you've got a nice level there where prices came down, prices went up, came down. Now prices didn't react here, but they reacted here. Now put yourself in the shoes of a trader who doesn't know what's coming to the right of the chart. So imagine you've got, you know, basically here, right? And all you can see is this bullish candlestick right here. Yeah. Now, you don't know what's coming to the right of the chart. But what you do know, and what you're expecting, is from a level like this, yeah, if you get a strong close, because this is what all technical analysis shows traders, especially breakout traders, yeah, is that when you get a close above a level, that the level has gone. That is absolute nonsense, by the way. Just because you get a candlestick close above a level does not mean that the level is gone. But if for those traders that believe that, that's great for us, because these traders then enter into positions. So they get captured in, right? They commit and they get captured in their position, right? Because once they press buy, then they're committed, yeah. And as Maxwell has correctly identified, is that these traders that end up getting trapped, yeah, breakout and retracement traders, in this case, breakout traders. And once price starts to go against them, yeah, so when price starts to go down like this against them, or when they thought the market was going to go higher, this starts to be the pain phase. Yeah, so more price goes down. Now, why is there pain? Why is there pain? Basically, what you're asking. Well, if they got a stop loss there or there, yeah, why would they be in any pain? And it's because traders tend to not stick to the rules. So yes, they get stopped out, and there are traders that will get stopped out and stick to the rules, but there are a lot of traders who don't stick to the rules. And there are traders that have rules that actually say that they shouldn't be trading with stop losses. So there are traders that don't trade with stop losses, and there are traders that will move and remove their stop losses due to discipline and or not having any discipline, and what is known as loss aversion bias. And loss aversion bias in cognitive psychology, decision theory, and behavioral economics, loss aversion refers to people's tendency to prefer avoiding losses to acquire equivalent gains. It is better not to lose $5 than to find $5. And if you apply that logic, if you apply that loss aversion bias, which traders tend to have, a lot of traders tend to have, right? They don't want to accept this loss. So whereas they had all the best intentions in the world to place their stop loss somewhere there, loss aversion bias will make them move their stop losses. Yeah, so stop losses continue to be moved lower, right? Or just cancel them altogether because of loss aversion bias. They don't want to accept the loss. Their inability to accept the loss is what makes them remove their stop losses. Yeah, and then the more structures are being broken, obvious structures are being broken to the downside, yeah, this induces more pain. Why does it induce more pain? Because traders understand structure. So once prices start to go against them and it's making lower highs and lower lows, what do you think these traders are doing? They're in a lot of pain because they're thinking now they're definitely caught on the wrong side of the market. The trend is to the downside. Yeah, so maximum pain, right? Their unrealized loss on their broker, instead of losing maybe 1% on a trade or 2% on a trade, now they're down maybe 15% on that trade, 20%. Who knows? They're close to blowing their account. Who knows? Yeah, but regardless, there's a lot of pain going on here for traders who got long up here based on that candlestick. Now, if you're in a lot of pain, what does everyone want? Some relief, some pain relief. So where's the relief coming? If they're lucky enough for prices to come back to anywhere near where they entered and they bought, traders are very motivated to get out for either a small loss or a break-even trade. Yeah, because that's the next best trade in the book. It's a break-even trade or it's a small loss or their original loss. And if they have to exit the trade and they bought, then they have to sell, right? Sell to exit, which is a supply, sell orders, as Maxwell has correctly identified. So you've got trapped traders, right? Traders who are trapped in their positions, who are going through the CPR process, capture pain relief process. Yeah, they will exit at or near break even. Tick. Traders who went long at support and take profit at resistance. If you follow the line down here, anyone who went long around here is going to do what? Take profit at a support and resistance level, because this is where prices are likely to potentially reverse. Correct? Some traders would have taken profit there based off of that support turn resistance. Some traders are taking profit up here. But regardless of whether they're taking profit here or here, there's going to be more sell orders from taking profit from anyone who took profit down here. There are some traders that are entering trades here, traders that are entering trades here, traders that are entering trades here. They're going to be looking to take profit somewhere, and this is an obvious level of support, resistance, and potential resistance in the future. So you have sell from capture pain relief traders, sell from these traders, and then you have traders who just generally short at resistance, yeah, who get in on brand new trades, entering the market, fresh new sell trades and getting short. Yeah, so as a if we're looking at the supply and demand equation as to why there's more likely to be sell orders from a technical analysis perspective, there's more likely to be more sell orders here than buy orders. And in combination with that, we have our fundamental analysis spreadsheet, which was telling us that the ranking for the Australian dollar was number 2, Europe was number 7, so there's quite a big divergence there. The Australian dollar doesn't tend to do well in a risk-off environment, which we are in, but it's the best of the worst at the moment. It's the dog with the least fleas. So at the moment, the euro area has probably more fleas than the Australian dollar, and so this was a really decent trade to the downside. And yeah, this is what we do and the process that I go through and the students go through every single trade. What we go through, it's not just capture pain relief. We do this for stop hunting, we do this for supply and demand zone trades as well, on the daily time frame chart. So this also had a nice confluence, really nice confluence, if we zoom out to the daily time frame chart, and we see a level, not only an intraday level of supply, but this also was in combination with a daily supply zone. So that's a daily supply zone. Why is it a daily supply zone? Because you have lower highs and lower lows being made. Lower highs, lower lows, right there. So that was also nice confluence of a daily supply zone. And where we're at now, and this, the trade update, there we are. So regardless of how you enter, whether it's on a pin bar, whether it's on a 15, 20 minute, half an hour, the risk reward on this trade was really nice. Risk reward was really nice. So regardless whether you enter, you place your stop 10 pips, 15 pips, 20 pips above the high, maximum potentially you may have got out of this is 158, nearly 160 pips off of this trade to the downside. Now nobody knows how far it's going to go to the downside. Nobody knows if it would have went that way at all, right? But the point is that we put ourselves in the best position to understand why prices should want to reverse here, other than some other levels. So it's got a lot, this level had a lot going for it, because the question normally asked is, how do we know it's going to be a strong level of supply or demand? Which supply or demand level should we trade? This is what we do, day in, day out in the Discord room. And high probability trades don't come around every single day, or they don't present themselves as often as we would like, but when they do, these are the types of trades that we take. Never confuse activity with accomplishment. The amount of trades you take does not correlate to the amount of profit you will make in the market. I can tell you that 100%. Just because you take 30 trades a day does not mean that you're going to be more successful than the trader that takes 3 or 4 or 5 trades a week. So it's not correlated. But this is what we do. This is understanding the supply and demand equation at levels. What makes this a nice level is that we got all the market participants. We understand all market participants, their motivations for getting in and out of trades, and the supply and demand equation there, as well as fundamental analysis on top of that. So really nice trade. So far it's worked out, and let's see how far it goes. If not, 2-to-1s definitely would have been made, and a really nice trade. Anyways, guys, if you have any questions, you can email me at info@trading180.com. If you want to find out more, go to trading180.com, where I have a free course on supply and demand. Take care until the next video. So if what I'm saying resonates with you, why not check out trading180.com? There is a selection process to trade my supply and demand zone forex strategy. I'm only looking to work with individuals with the right mindset, who are hard working as well. So check that out. And access really for less than £1 a day. Some of the strategies in here are not for beginners. So if you don't know what supply and demand is, please check out all of my supply and demand videos. I have hundreds of videos on YouTube, so you can check that out first. Guys, take care, and until the next video, have a good one.